Happy New Year to everybody, and welcome to the first Let's Talk About It discussion for 2026. Um, we've been gone for about 3 months. During that time, we've been working on the website, adding a lot of new features that will be rolling out later this month. And so that's how we've been spending our time. But tonight, we're going to have a discussion about the performance of assets for 2025 and what is the outlook for 2026. And this is truly going to be a discussion. I'm going to start it off um, with the disclaimer. So let me put that on screen and let me go over it real quickly. The information provided is strictly for educational purposes only. Strongly encourage anyone to consult with licensed financial advisors, attorneys, and tax professionals before making any significant financial decisions. Um, though I have, 30 years professional experience, I am not licensed or registered with any regulatory authority. And so that covers the disclaimer. And I'm going to do a real short 2-minute video that highlights some of the the results from 2025. So let's start with that.
If you're a new investor trying to make sense of 2025, this breakdown is for you. Let's kick things off with the big lesson from 2025, because it was one wild ride. These big, conflicting forces sent shockwaves through the markets, creating a real roller coaster for everyone. And three events in particular really cranked up the uncertainty, keeping investors on edge. So, how did the stock market handle it all? Let's dive in, starting with stocks. At first glance, it looked like another great year for US stocks. Strong double-digit gains. But that big number doesn't tell the whole story. The gains were super concentrated. Get this, just 7 AI-related stocks were responsible for more than half of all the gains. This is what's called narrow leadership, with these AI-focused companies just leading the whole charge.
So with that kind of performance, you'd think US stocks were the top performer, right?
Surprisingly, no. Some international markets quietly delivered even better returns. Go figure. Okay, now let's look at the assets that really struggled to find their footing in 2025. Yeah, it was a tough year for oil, the US dollar, and even Bitcoin. So what happened with oil? Well, you had fears of oversupply and signs of weaker demand. And Bitcoin? Despite all the hype, it faced huge outflows and macroeconomic pressures. So if stocks were complicated and other assets struggled, where were the biggest wins? Gold. It had an absolutely stellar year, a record breaker, as investors ran for safety. But here's the crazy part. Gold wasn't even the #1 precious metal. Not even close. Nope, that honor goes to silver, with a mind-blowing 120% return. So why silver? It was the perfect storm of hedging and huge industrial demand from AI and energy. Okay, so what's the takeaway for a new investor after a year this wild and surprising? Well, it really boils down to 4 key lessons. It's about structure, not just optimism. And this quote really says it all. Understanding the system is way more important than just chasing returns. So heading into 2026, it's the big question. Are you chasing returns or building resilience?
All right. So let's talk about it. And this is going to be a discussion. So I want everyone to just unmute themselves and to join in. Um, we 2025 was definitely a stress test, right? We had what happened in April um, because of the tariffs, um, which the stock markets lost 10% in 2 days. Um, and if you would have jumped out of the market at that time, you would have missed the great returns during the second half of 2025. Um, and so let's jump um, into the different asset returns and look at them side by side. So we've got U.S. Equities. And when we talk about U.S. equities, we're generally talking about the S&P 500, um, which is the index that's generally looked at. And it was up between 17 to 18% for the year. But um, out of the 500 stocks and companies in the S&P 500, seven made up more than 50% of that return. Um, and so the rest of the S&P 500 didn't really do that well. So what was your guys' experience in how U.S. equities did for you guys? So just unmute yourself and feel free to jump in.
Well, first off, this is Joseph Jones, and hi, Michael Evans. Happy New Year to everybody.
Hey, Joseph.
Um, um, I actually have no complaints about last year at all. It was my best year ever.
Oh, that's great. Now, were you invested in index funds or individual stocks?
I got kind of a mixed bag, but more individual stuff. I didn't really do a lot of index funds. I did have a couple of ETFs that were paying well. They were in the max yield family, and I'm not holding them right now because I've repurposed some of my profits. Um, because that's the reason why my year was so good. You know, I re uh actually starting, I want to say the last couple of months of 2024, I started um moving my money around, you know, and those adjustments, I'll call them, worked out very well for me. And I've just been getting ready for this financial reset that's all but done. Congress was supposed to, I mean, not Congress. Congress already passed their version of the Clarity Act, but the Senate, actually, they were supposed to vote today on the markup for the Clarity Act, but the bankers keep getting in the way. The lobbyists for the bankers keep getting in the way because the banks don't want competition, and they want it codified that nobody can compete with them basically, because they're afraid if there's any competition, people will leave because they don't want to pay fair interest rates. So that was the holdup today. At first it was going to be delayed till the 27th to vote, and then they made some sort of a compromise or near compromise, and then the vote was supposed to happen today. But then on the other side, Coinbase wasn't happy with the modifications and the deals that they made. So now the vote's been postponed again. So We don't know when it's going to happen. They're trying to get everything done by the end of this month, but I've been positioning myself to take best advantage of the reset, and because once this is all voted and 47 signs the bill into law, um, money's going to be different from now on, or from then on. Um, it's going to be all digital, and they've got some rules. The banks are just waiting. They're sitting on a lot of on certain assets, just waiting for this Clarity Act to be signed into law. And once that happens, they're ready to jump in with both feet. So there's a huge amount of money to be made. Um, what are they calling it? The biggest exchange of wealth
Right.
in the history of finance. So I've positioned myself to take the best advantage I can with that, with the profits that I've with most of the profit well, some of the profits that I've made in 2025. But I had a great year.
That is great to hear. And sounds like one of the most important lessons is um, repositioning your portfolio, and um, it, it's your plan is an always developing plan, and it goes with the flow, and you make changes based on what the market presents to you. So I'm glad to hear of your success. Um, Anybody else want to
Yeah,
talk
let me
about?
pop in real quick, man. You got the heavyweights in here, man. So let me get in here and let these heavyweight dudes up in here, man. Also, big shout out to man, Mr. Timothy Holly. I remember you from a couple of meetings, man. So I definitely like to pick your brain on something going into 2026. Mike know me well enough to know where I'm at on a lot of this stuff. I'm more in the AI space. It's good that you put the stocks in there, but you should have put some more stuff in there, especially with AI infrastructure. International equity is no surprise to me with the stuff I'm doing in Dubai, where you can just see it's a phenomenal explosion in Dubai real estate. I got the Amra project. Matter of fact, I got to do some marketing for the Amra project. That's the first casino that's going to be in the Middle East in Dubai. That's big time. We ain't talking about no back alley joints. The first real legitimate casino in Dubai going to be out there. So I'm proud to work on that. But with the space that's coming in, man, with blockchain, Web3, prop tech that I learned from a lot of guys over in Dubai, bringing real estate to the blockchain. It's a lot of opportunity, like the other gentleman just said. If you position yourself, XRP and the Swift Bank move. Check my dude, check my guy Alfred Hayes, man. Blockchain Buzz on TikTok. Alfred Hayes on LinkedIn. One of the guys that's really letting people of melanated descent bring their businesses to the blockchain. You know what I'm saying? Which is really going, and that's why you see the spike in gold and silver, because a lot of assets on crypto and blockchain are going to be backed by gold now. They're already making that move. You know what I'm saying? So it's going to be certain things that we've seen that we didn't see before. But with us, the first thing I really wanted to get strong was own everything I make, own all my intellectual property. If I want to NFT it, whatever I want to do with it, you know what I'm saying? That's a possibility there. If I want to meme coin something, they got a good backing, we can do that. Like Brother Mark T. I wish he was here because he can really expound on that. Now he got his own stuff set up with the No Backboard Basketball League. So it's a lot of us moving. Like since the pandemic, man, a lot of us got our stuff together and really started moving in businesses, and that's where you see the great leap. But it's going to be even more. But I dig the list. I agree with all the numbers. Real estate, especially in January. People be looking low and trying to get ready for the spring, so things slow down. But I was able to really keep going by getting my AI up. To get my engines up. I create my own engines now, my own ecosystem, my own agents, my own bots. Everything is automated now, so I don't got to do all that. Mike, no, I started with nothing, just me making phone calls. Now all of that is done for me. To have the film Apex where I can actually make films on Sora. I can take their stuff and make full-fledged. It's the intelligence and the technologies out here where you just got to talk. You got to have a little bit of brain to figure it out if you want to code or get into the heavy stuff. But other than that, it's never been easier to get wealthy in this time. And it's 100 trillion in what, by 2030? We got a good 4-year window. But NVIDIA all the AI stuff, that's the space I'm in. So I'm a rock in that arena, man. But I want to hear the heavyweights talk. That's just what I'm thinking right now. I'm gonna step down, land the plane. I appreciate you, man. Happy New Year, Mike. For real, for real.
Happy New Year, Jamal. I'm glad to hear the success that you're having. Uh, Anyone else want to talk about their 2025 achievements before we break down each of these asset classes?
Well, this is Tim, and Happy New Year to everyone. And I'm glad that nobody lost. And so I would tell you, for me, the most significant and important asset class that happened this year was my personal health. Because check this out, we all work too hard and be too intense on what we're doing, and staying in front of that computer and all that kind of stuff. Hey, it almost took me out. Yeah, I almost died, literally. And I've actually I lost like 5 people over this last year. So it really, as an old man, I'm 77, it snaps your mind into saying, hey, you better get yourself right, because all that money you're trying to make, all the value you're trying to do doesn't mean a doggone thing if you don't have that. So I'm getting
Amen.
myself back back in what they call build back better. So I'm trying to build back better than where I was. On business side, um, my business did very well. We worked really hard to get it. I didn't invest in stocks because I'm invested in a public company that I run, and so I'm trying to turn that ugly beast around, and which I did when I stepped in 2023. It had a shareholder deficit of 5.3 million dollars, and it has, as of the end of 2025, a shareholder equity of 5.2 billion. So I did all of that in that time period. Okay, so I have my attention and focus on that, not managing other money or getting. And guys, what all you all are about is fractional stuff and Bitcoin. You guys are geniuses. I would I can't touch it. I don't even know I don't even want to play in that game. It's too deep for me. Okay, this is an old dog who don't want to learn that new trick. So I rely on you all to do this. But
Well,
we've done very well, and I can't complain. I will say this about one thing I did learn on the Big Seven, the Magnificent Seven, as they're called. They're all playing special games, and we better be ready for what they are going to do. I just found out today about Meta and how they're not playing around anymore. They're going out here creating their own $600 billion data center. Man, this is some heavyweight stuff. 600 billion they're throwing out there. Um, so you can get in the game and look at the Magnificent Seven. All these other little companies around, everybody's going to be snuffed out over time if they don't look out, because AI is not no plaything. When we got to pay attention to every bit of it and see where it changes. Now I'll tell you this: one of our advisors, one of my company's advisors, is a brother who runs. He runs $30 billion, about $22 billion in institutional money, and he called me up and said, "Well, now that you see silver where it is," he said, "and what NVIDIA is doing, you need to flip your company to NVIDIA." I said, "Why?" He said, "Because they need, check this out, they need a story to last. They need a story that can last them a couple of quarters. That's all everybody's after is, can I have a new story for a few more quarters? Because the AI thing may blow up. We don't know. I mean, the whole change is moving. We're moving from generative AI to past that to a whole another thing, past the semantic into a whole another world of AI structuring. So I'm just saying this is very important to pay attention to and where we're going to go. Last thing I'll say is, my good brother, you over there creating the first casino in the Middle East. First word I would say, get you some security. Okay, get you some security who understands what's going on over there, because though that's great, it's going to still be, it may be the
I'm
first
just
attack.
doing the marketing, Mr. Tim. I'm just doing the marketing. I'm just throwing up some ads for him, but I do have an invite to go though. But yeah, I'm just doing the ads for him, my friend.
All right,
And
good,
I
because
appreciate that, man. I
that's going to be a
appreciate
target for every crazy a person who's in the Islamic crazy guy is gonna say, "I'm gonna come and destroy that." That's what they're gonna think about. But then they're gonna think about where they are and how should they mess up the money. Anyway, listen, everybody. Like I said, you all are brilliant when it comes to dealing this in this new world and so forth, and that's really important to what you're doing. So keep it up. Me, I'm gonna try to keep it up and stay alive. Keep it up on 2 feet and stay alive. God bless you.
Thank you, sir. I look to talk to you someday, sir. I really, really do. Thank you, Timothy. I appreciate you, man.
I would like to ask a question. The second person who spoke, I'm sorry, I don't remember your name. Is it Jamal?
Sir,
Yes, Mr.
Is that Jamal?
that's me. Yes,
Um,
sir.
yeah, you mentioned XRP. Um, are you aware of what's really going on with that?
It's some movement that kind of shook me, but I had some cats that just kind of told me the whole fast blockchain buzz being one of them because of the movement they was making with the Swift banking and some other institutions, right? So, like I said, I'm learning slow. Really,
Okay. Well,
my first intake came with like helium, the smaller coins. I really never dabbled. You know what I'm saying? I was in the real estate strong, but when I started
well,
moving towards blockchain, Web3, and AI, I got that. I put it. I ain't nothing to destroy me. You know what I'm saying? But I put a little something in. But you know something. I'll be more than glad to listen, man.
okay. Well, yeah. Have you heard of Ripple?
Yes.
That's the company that created the XRP ledger, but they don't control it. They've built it to be um, neutral, so that every country, any country in the whole wide world can use it, but no country can control it. They did that on purpose, and there are some people, or there's at least one person that I know of that is involved with the BIS. I guess they're on the board of everybody knows what BIS is, right? The
Bank
That's
for
the
International
master,
Settlements.
yeah, the master bank of the world. They are the bank for all the other central banks in the whole world. And somebody from the board of the BIS is on Ripple's board as well.
Let me ask you this
And
before you get rolling. Let me ask you this. It was one of my guys of Discord, right? And he was kind of going the same route you going. He's saying what he was saying is it could be an automatic crash out. So all the guys at the top get paid out and they just crash it out. Could that be a possibility that you see also?
Uh, I I I guess anything is possible, but I don't see where they have any kind of reason to do that, because basically what they're poised to do is completely slowly, well, not that slowly, but gradually they intend to replace the Swift system completely. Um, Ripple, the Ripple company, they're they applied to get to become a national bank, and
So Joseph,
they're and
Joseph,
yes.
Joseph, I'm gonna put you on hold before we go too far down this rabbit hole. Um, and we're gonna come back to that at a later time when we delve deeper into the blockchain rails and Bitcoin and crypto. Um, but I see that Lorraine, you've had your hand up for a while, so I'd like to recognize you to speak.
Yeah, I just wanted to say like some wins that I had was touching base with you and applying the knowledge and seeing where I am in my investing and and just because I was tracking that I was meeting my goals and then like with knowledge share. And so everything when I finish a reading lesson or I finish a milestone in my financial journey, I do share it out to Black women who might still be scared of investing or aren't doing it, just to empower them with the knowledge that it is possible. And I finished my master's, and so in data analytics and data science. and have been learning how to use AI through Claude's learning models, taking foundational classes and using that to supplement my knowledge gaps with back testing and back coding, of course, and with coding to create systems, automated systems, because I am a researcher when it comes to learning, and I'll sit and read all day, but AI is a different space where you don't really have to know everything and it's supposed to speed up. So I'm trying to retrain myself in that, in allowing myself to just program and and delegate knowledge gaps to the AI. And so that's speeding that up. That is a transition. Uh, and so that's like a win, but that's a slow gap, a slow cross that is going to take some time, because that is a whole different way of applying knowledge, is to just jump in it and rely on a machine to tell you what to do. But but that's where we're at, and that's going to be the future. And so I get what a lot of you have said, like there's no reason not to make money today, especially with something like AI. If you learn the foundation of what you want, then the AI is supposed to take over and assist. And so I'm trying to get in that headspace and not let my knowledge gap or my fear be a barrier.
Amen. Amen.
Let me
Well, that's
give her
good to
a
hear.
tip. Let me give her a tip. I'm just gonna be a quick and I'll land the plane. Don't look at it as like it's telling you what to do. You tell it what to do. That's the thing. The first lesson you learn in anything AI is don't prompt the AI like you're talking to Google. If I want to create something, I'm gonna tell it what I want created, and I'll let it enhance it for me. So don't. A lot of people look at, well, it's telling us. No, you telling it. You telling it what formulas, what systems you want. Exactly, but it's a tool. So how you got to keep it is don't let the fear go of it's telling you. No, you telling it. Now you can program it to be a little tougher in speech to you or whatever, but you tell it. It doesn't tell you. That's all I really had to say. I hear that a lot, and I think you tell it. It doesn't tell you.
And I
Well,
would like to
I will
add to
say
that if I
that
may.
I would say like the foundation, like you got to delegate it tasks, but it is still telling you a lot. If you're not an expert in it, it's still telling you a lot of what you don't know yet.
I,
But that's
I would
okay.
Okay, I'll give you
I
the
would
first
like
reason,
to
Madeline.
add to that if I may.
Go ahead. Go ahead. I'll let you speak.
Um, I use AI extensively, but well, they were. I don't know if anybody's read this book, but they had put Henry Ford on trial to prove that he was incompetent because he had like a sixth grade education or something like that. And they were asking him a lot of technical questions about what he knew about this, that, and the other. And he said his answer was, "Sir, I on my desk I have several boxes with little buttons on them. And if I need to know something, I push a button and somebody comes in and tells me what I need to know. So why should I clutter my mind with a bunch of little facts when I can get them whenever I want and then do what I want to do with them?" And that's the way I use AI. The exact same way. If I want to know something, I have AI go find the information for me or find out where I can read about the information or what have you, and I take that information and do what I want to do with it. And that's been a very effective way for me to use it.
Let me come on your flip side. I'm gonna tell you exactly how you tell AI. Everybody been on Sora? Have you been on Sora, young lady? The app Sora, where you can make the little funny, quick videos and all that stuff, right? So the first thing I saw that Sora could make film, but nobody was prompting it to make film. So what I did was I built an engine called the Apex Film Prompt Ecosystem, where I actually prompted to make film. I got a mob movie section. I want to make The Godfather. I got a space section where I made the first melanated black Star Wars. Mike has seen my movie Hannibal. I've done the accurate historical characters of Hannibal, our people. So, when I say I broke Sora, because it wasn't built for that. It was built for the little funny, quirky stuff. So what we did was build prompts that made Sora make film. without the little stupid areas or the 6 fingers or the 2 heads. We didn't get none of that stuff. So we told it depends on your level in this. Okay, if you at a level where it's still telling you, no disrespect, then you got to raise your levels. We tell it. It doesn't tell us. It could come back with facts that we might have had before, but the initial design is ours. Anything you put in AI is the seed of you, not the seed of it. You tell it. Now, it may help you grow along the way for sure, but you still mold it. It's learning to mold us, but it ain't quite there yet. So far as this, you tell it. And I know I broke Sora. On that, I'll land the plane.
Yeah.
Well,
So,
can I interject
yeah, go ahead.
to support what Mr. Jamal has said? Not only do you mold it, it's being molded by what you provide as well. Remember, it is an absorbing source. It's machine learning. This is not new. It's just new to the public. I've been dealing with AI and machine learning for over 30 years. So this is nothing new. There's nothing new under the sun, but you have to understand your prompts are your requirements. This is what you're requiring it to do. The test is what it delivers, and you need to be able to verify and validate what it delivered. If you look at it that way, hopefully you will get better value out of it.
And actually, I think what I'll probably do for a future discussion is just to do a primer on prompt engineering, because once you learn how to prompt AI, then it becomes a much more useful tool that you can rely upon, um, and, and get a lot more out of it. But a lot of it has to do with the way that it's being being prompted. So, for time's sake, is there anyone else that wants to share their 2025 experience? Okay. So I'm going to run through these real quickly about U.S. equities. This is where I started. The S&P 500 had a return of around 18%, but more than 50% of that was driven by the Magnificent Seven. Outside of those 7 stocks, the S&P 500 did not do well at all. And so this is where we are seeing that, according to the index funds that you're dealing with, that they can mask true volatility and issues that are going on with the index. And so this is where you would have been better off investing in an ETF that focused on the Magnificent Seven versus the benchmark of the S&P 500. And so for 2026, this is where selectivity over passive exposure becomes essential, right? Now, if you don't have any experience dealing with stocks, then the S&P 500 is a great place to start, just to get into the habit of investing, buying the SPY ETF, doing dollar cost averaging, where you're investing the same amount of money each period of time, whether it's each paycheck or every week or once a month, and just getting into the habit of investing, and until you get into that habit and do the homework, do the education of what are the different stocks, and um, what should you be investing in, what's driving the market, and based on your risk tolerance, right? Earnings quality um, is going to be what is driving these prices. Um, and we're now at where um, prices are at an all-time high because earnings are at an all-time high. We've got we're in this what's called this K economy, where um, equities are doing great because you've got a handful of companies that are investing billions of dollars into AI, into energy, and into infrastructure. Um, and and but the next question for 2026 is, can they deliver on the earnings? Um, and when we get into the AI stocks, um, you may be um, surprised on what the number one AI stock for 2025 was. International equities. So this is where um, equities in other countries, especially like South Korea, South Korea's stock market doubled in 2025. It had 100% return compared to the S&P 500 return of 18%. Uh, Now, you've got to do your homework when it comes to investing in international markets, right? You've got to have a a structure, and um, just because it did well last year is no guarantee that it's going to do good this year. And so for the 2026 outlook, this is where tactical research-driven exposure beats blanket diversification. So rather than just investing in an international fund, um, it it is worthwhile of doing the homework, doing the research of what are the best international markets for you to invest in. Again, given your risk tolerance. And then there's geopolitical risk. And man, this year has started out with a bang when it comes to geopolitical risk. And so with us taking over Venezuela, um, with the president threatening to take over Greenland, um, and threatening to invade other um, South American countries, um, and who knows what we're going to do with Iran. The geopolitical risk is extremely high because we're dealing with a president that's unpredictable. Um, and so just have to um, keep that in mind when looking at international exposure. And again, if you've got low risk tolerance, then I would recommend not playing overseas. Just staying on this side of the world, and focusing on U.S. equities. Bitcoin and crypto. So 2025 was a banner year for crypto up until October of 2025. And then all hell broke loose starting in one day, where there was a flash crash in which Bitcoin dropped, man, I forget how many thousands of dollars it dropped in an hour. But that was the beginning of the unraveling of Bitcoin and crypto's performance for 2025. And so we saw the last quarter of 2025 be horrible, horrible for crypto. Bitcoin went from a high of breaking 125,000, dropping back down to the low 80s in a matter of a couple of months. And so if you're in it for the long run, though, if you're if you look at Bitcoin and crypto as what it is, that Bitcoin is non-sovereign monetary hedge with long duration optionality, then this was a buying opportunity. And crypto grew up in 2025. We had the stablecoin law that was passed, and they're still debating on the Clarity Act. But the shift has started in which the entire financial system is moving onto the blockchain rails. The banks are on board. And so this may be a rough patch, but crypto has always been volatile. The big difference this time is that you have institutional money that is rolling in. You have the ETFs. You've got the big banks behind it. You've got the big equity funds that are piling in. And so now when it comes time to investing in crypto, it's infrastructure over speculation. And it's about long-term investing. And so, again, based on your risk tolerance and based on your outlook, now may be the time to get in. And one sub-market to really pay a close attention to are the privacy coins. The privacy coins are near an all-time high, and it's going to be interesting to see how that infrastructure plays into the overall infrastructure. Because one of the reasons why the Clarity Act got stalled today was when Coinbase's CEO objected to the current markup of the bill and said that the current markup of the bill would actually do more harm to crypto than no bill at all. And one of the major issues was privacy. And the way that the bill was marked up, it would allow the Treasury Department to freeze a person's crypto for 30 days without notification. And so we have to understand that now that the institutions are coming to play in the crypto world, they are bringing their traditional rules of control with them. And so there's going to be this struggle. No industry that moves trillions of dollars and makes trillions of dollars is going to just roll over and allow the new guy on the block to take over. And so we have to, call it what it is. It's a transformation going from old systems like the SWIFT system to blockchain systems with instantaneous settlements. But they are allowing that to happen because of the benefit to the institutions. So we always have to keep that in mind. But it's coming. It's just a matter of getting where you can fit in. Real estate and commodities. So let's start with oil. Oil got battered in 2025. It recently made a slight comeback because of what's happening in Iran. And it's fighting to stay alive, is what I say. This president is all about drill, baby, drill. He's done everything to try to stop the clean energy industry, but the clean energy industry keeps rolling on, and so oil prices have suffered because of that. Food prices or commodity prices like coffee have gone up like crazy because of tariffs. We don't ultimately know what the outcome of the legality of the tariffs will be. But what we do know is that this president is hell bent on having some form of tariffs in play. And so, though the type of tariffs may change, I think tariffs are here to stay. And so that affects commodity prices. Now let's jump into real estate. So real estate prices still remain high. The president has been pressuring the Fed to lower the interest rates. He ordered, I believe it was the Treasury to buy $200 billion worth of residential debt through Fannie Mae and Freddie Mac. I think that temporarily lowered the interest rates associated with real estate loans. But the thing about real estate is still localized, right? And so, real estate prices in LA are going to behave differently than real estate prices in Miami, than real estate prices in New York, than real estate prices in Dubai, right? And so um, real estate becomes deal specific and it's not sector wide. And so you just need to look at each real estate deal on its own. Um, and and so, you know, um, my company manages real estate deals in Detroit, and we're, still doing double-digit returns, investing in turnkey, low-income Section 8 properties. It's not sexy, but it's consistent, and it's recession-proof. Um, and so just keep that in mind when looking at real estate. Look at it from a deal by deal perspective. Gold and silver, man. So gold was up more than 60% for the year, but it got outshone by silver, which is near an all-time high, um, over 150%. And so what's the difference between gold and silver? Well, gold traditionally is a hedge of inflation. It's been like that for thousands of years. And so it's playing that role. Um, whereas silver um, is also a hedge against inflation, but there's strong industrial demand, specifically when it comes to energy, AI, and electrification. And so, uh, what does that mean for 2026? Well, we're still going to have high energy demand. The AI demand is not going to go down, and electrification is going to continue to expand. And so, I foresee the demand for silver continuing to stay high. Um, and so um, I think that gold and silver will still be standout performers for 2026. Doesn't mean that you pile all in on gold and silver, but um, I do recommend that you look at where does it fit in your portfolio. And then there are AI stocks. So AI stocks, man, you talk about a wide range. Um, we could look at, I believe, Amazon, which was only up around 9 or 10% for 2025. Um, you had Nvidia, which was up around 35%, and then you had Google, which was up more than 60%. Um, and so the AI stocks continue to dominate when it comes to just the amount that they're investing in um, infrastructure and platforms. Um, they're heavily investing in mergers and acquisitions and buying up private companies. And the valuations of these private companies is going insane. We're talking about um, valuations that are 10xing in like 1 to 2 years easily. And so that also helps contribute to the K-shaped economy, right? Those who have money are able to be angel investors. Angel investors invest in early stage companies, um, and those early stage companies then are acquired by the larger public companies. And so angel investors' monies are growing astronomically. But for the average person doesn't have access to deal flows like angel investors and venture capitalists. Um, the average investor doesn't have access to invest in venture capitalist funds. Um, and so, this is one of the reasons why I started CPIN is to create a platform where the average person can pool their money together with other people and invest in early stage companies. Excuse me. Um, Particularly Black companies. And so 2026, we'll continue to focus on those. um, we'll continue to bring you special purpose vehicles, opportunities to be able to pull your money together to invest in a more early stage companies. And the AI industry is prime for that. So some core lessons. Um, Returns without understanding increase risk. Um, just accepting performance without comprehension creates fragility, not wealth. You're not able to look at how should you best rebalance your portfolio, and you should look at rebalancing your portfolio at least on an annual basis, according to how knowledgeable you are. You may want to look at it on a quarterly basis. And the way you become knowledgeable is through our knowledge center and through the different courses that we have, attending Let's Talk About It discussions where we talk about different asset classes. Um, and so, um, you know, really having a good fundamental educational foundation becomes paramount to you building a portfolio that can withstand the bad times. Because for the stock market, the last couple of years have been great. But what we know is that the stock market doesn't always go up. Um, and if AI doesn't start um, showing some earnings, we may have some rough times ahead in the equity markets. Number two, concentration beats diversification until it doesn't. So if you would have been concentrated in AI stocks over the last couple of years, hey, you made a whole lot of money. Um, but the same can be said in the late 90s with the .com stocks. And then when that crashed, um, concentration beat diversification until it doesn't. And so if you're in it for the long run, you want to build um, a portfolio that can withstand the the shocks, and you want to become a disciplined investor. Um, and so we look back at April. And when the tariffs kicked in and the stock market took a dip, there were some that jumped out um, because they diversified portfolio. Those that stayed in reaped the benefits. And this kind of leads to number three, liquidity equals optionality. And so um, cash, you always want to have a little cash around, you know, maybe 5% of your portfolio to take advantage of opportunities that present themselves. So when stock markets pull back, when crypto pulls back, you want to have some cash that you can deploy in order to take advantage of those opportunities. And then the last is just a reinforcement about education. Education compounds faster than capital. Um, and those who understood systems slept better than those that were just chasing returns. Um, so for 2026, um, preserve first, right? The very first rule is not to lose money, is to preserve money rather than chasing wild returns. Um, favor non-correlated um, return profiles where there's more upside than there is downside. Have a multi strategy approach and participate in the community like CPIN, where you can leverage collective intelligence. Just some of the discussions that we've had today. I know that some people got some nuggets out of it. And remember, CPIN isn't about beating the market. It's about building resilience together. And with that, um, we are at our a little bit over our hour. Um, I'd like to thank everybody for participating, for attending the first Let's Talk About It discussion for 2026. And does anybody have any final words before we go?
Hey, I'll give you a couple of things on the foreign markets. If you really don't want to know how to play over there, play in the United States with foreign currencies under American Depository Receipts, ADRs. You get all the good information, you get the same activity as if you were investing overseas directly, ADRs. But here's a stock that you need to pay a close attention to. Headed by a black man who don't really want to be black, Palantir, PLTR, Palantir. It triple digits. It was doing triple for 3 years. You better get up on a Palantir because Alex Karp, the brother Alex Karp, is one of the PayPal mafia. He's one of the people that if Trump don't mess with them, they're the ones that put the money in to make him do what he's doing. So check out Palantir. I've been in that space of security. These guys are the AI heavyweights, and they're controlling tremendous stuff. So yeah, take a look at that Palantir stock. Anyway, that's all. Great job, and I appreciate that. By the way, don't always get sucked into the old school of value investing based on earnings. That's not always a reliable target, especially in the AI market. You can get it based on growth because there are a lot of companies. OpenAI doesn't expect to be profitable until sometime after 2030. But as a stock, they would go crazy. So there's stocks out there, Iconic and others who are making Big Bear, who are making great returns, but they have no earnings. So just think about it. Be wise. Be careful. God bless.
Thanks, Tim. Um, Leroy, Sharon, any final words?
I enjoyed the conversation and the discussion and the information. Thank you for the invite, and I look forward to future events.
Thank you. I have enjoyed the discussion also. I was listening attentively. I am a good listener and I am a good applier. I am always thinking and I am always putting pieces together. So there were many pieces that were discussed tonight that helped my mind to pull things together. So I appreciate it.
Well, like I said, I want to thank you guys for coming. I'm glad that you got something out of it. And we're now going to hold our Let's Talk About It discussions on every other Thursday. And we'll be rolling out some new features to the CPIN members only website. So keep your eye out, um, looking for that. And everybody stay blessed and stay safe. Bye-bye.
Good night.